recording this. Yep. So we had this clean range to the left. This was around 30 pips. So then I was wondering, okay, fine. So let's wait till price break up over this area. So this was a rejection point as well. So I was waiting for price to break up above this. And then as soon as price was breaking up, I took an entry at 136.808, which stops below the breakout candle. And the stops were around 13-14 pips. So I wasn't even going to manage if price comes down. So then the next candle started going up. So I secured a position, a bigger position, because I wasn't comfortable with it. So I secured at 887. So that was right over here. 887 was just when this candle started to finish. And then I closed over here and I had one runner at one lot just open right at this point. So this was kept at break even, so 136.808. So what happened? The next candle, instead of going all the way up, it came down. It hit my break even at 136.808, and then it hit my target over here. So at this point, like, I was happy with the profits I made over here. I at least made somewhere around, yeah, almost around 8-9 pips, yeah, 6-7 pips, yeah. So I was happy about that, and then I just let this go. But then again, almost like 10 minutes later, I came back and I saw that, okay, let's just take another position at 136.930. So 136.930 was right over here. Let me take this off. 136.930. It was right over here. Yeah, so stops were just kept below this. And then I was thinking, okay, what I am trading outside my trading session, so I didn't want to over trade, and this was just like, you know, just because this went on a break even and I saw that price was heading to my analysis, I wanted to get in. So I opened a one lot over here, and then as price went up 136.962, then I looked left and I saw, okay, what are the odds that price is going to reject this level? So I secured 0.75 over here, and I let this 0.25 run, because in my mind, price one GJ belongs in the 138, 140 level. So I was wondering, okay, let me hold this trade at least for the week, 0.25 until 140s. So I kept my stops at 804, just below the candle, the open candle I took over here. So price went into profits. That's why you should always secure. So price went into profits of 15 pips, but I wasn't at the chart. I wasn't monitoring my MT4. So then price now came back and it hit my stop over here. So when I came to the charts the next day, I saw that, okay, price has hit my stop. So I was like, okay, so this was a lesson in the beginning of the week on a Monday. So not to over trade. So I took one trade that was in a profit. This was in a break even. This can't even be considered as a profit, but profit is profit. So this thing was taken away by this stop loss. So I was like, okay, I'll just stick to my plan. And the rest of the week, I kept this in mind, what happened. So this could have got worse because this was at 136.930 and 804. So luckily I had a stop place right over here. So if not, if I didn't have a stop, or if I had a wider stop, price fell all the way 63 pips in a loss. So a stop loss definitely saves you. So right over here, a stop loss saved me. So that's for Monday. And then we go to yeah, this was during the 27th. So 27th over here, yeah, 27th over here, this was during London. Yes, this was during London. So 136.313. So 136.313. This was on the 27th. So 27th, 136.313. That was right over here. That was right over here. 136.313. So this was right over here. Short positions. 136.313. All right. Right over here, which stops above this. And this. The reason why I took this was, okay, and now let's see, right? So we go here. Let's okay, so this was this. Or let me see. Well, let's draw these lines first. So this was a resistance that was formed on the 30-minute, which was respected from the 26th. And then we draw this. So just don't look at this side. This side is because this price action still hasn't happened on this side. So you need to look at the recent price action. So this was during New York. So this was during London. So 136, 313. I had a short entry over 136, 313. Let me see. Yeah, so right over here. So stops were just above this. And so it was London. So I was up for London and I saw, okay, price was falling. Because we had this huge range to which was supported, which was all the way from 26. So what are the odds? So this formed like a bullish 30-minute candle. So with this price action we've seen many times for this week. This candle forms like this, and the next candle, once it breaks the low, it goes at least 10 to 15 pips in profit. So when I came to the charts, I saw that this candle was breaking the low, and I took entries. I had a 2 lot open. Yes, a 2 lot open over here. So at 1.50, 1.50, yeah, 1.50 lot size, I had 3.13. My entry was at 3.13. My stops were just here, and then I secured at 2.110. So 2.110 was right over here. This candle came down. It came all the way down, and then once this candle came down, so this was this I entered, and then on the same time, not even 3 minutes or 4 minutes, the candle came down and it was going to close, and I secured 1.50 over there. And then the next one, 313, the candle was retracing, so 217. So this candle, right? So as it was retracing, I secured here, and this candle was retracing all the way back up. So I was like, okay, let's secure more positions. So 217 I secured over here, and then 136,299. So 136,299, that was right over here. So this candle had closed, and this candle was now retracing back to my entry. So I didn't want price to go back into my entry, and I didn't want to experience a drawdown because I was already in profits. So my stops were also at break even, but I wanted to secure. So what I did was I secured at 136,299. So this was a $3.34 profit, but overall this was my main hit. So 147.48 on a 1.50 lot. So that's fine. And then we come to the New York session. This was a buy on GJ. So this was on the 27th, still the same day, and 136,458. So let's remove this. 136,458. So this was a buy, right? This, what happened, this yeah, for this session Ashfaq and Daniel was there. So what happened was we saw that price made a low here, and then this on the daily was a huge support. This on the daily 136. So 136 as a whole, 136,200, 136,100 is considered a psychological level. So we saw rejections. So then this candle closed as a bullish, a very, very strong bullish. This candle alone was 23 pips in profit. So what did I do? So this, even Ashfaq and Daniel and Jonas also was there. So this was before JJ joined, and this candle closed like this. So as you see, from Asian to London, we had this huge range. Price closed back in the range. So what are the odds that price was going to go up and retest this high that it made during Asian session over here, right? So what I did, I took entries right as this candle was forming. This candle was breaking the high. So my entry was, I used a very small lot. This was a 0.25 lot. Yeah, 0.25, yes. So because why did I use a 0.25 lot? Because I had taken my trade, my biggest loss lot during London. So I was like, okay, so let's take a trade, but let's reduce risk. So I was only willing to risk this portion, 22.91, you know, because I made 147. So I was like, okay, let's just risk 22.91 on this. So that's hence I used 0.25 lot for buys. So as I entered at this level, so this candle started forming up. So this candle was here and I took entries, let's say 136,458. So 136,458, 136,458 is right over here. Right over here, my stops are below the previous candle. So my stops were around, yeah, it was around 10 pips. And I was hoping this candle to break above this, because when you look left, you see clean candles all the way up to here. So my target was all the way up here. My target was all the way up here. So I was hoping that this candle can break this support and close above this, and then we'll have a good profitable day. But then what happened? What happened was price came up. So it came up a little bit in profit, and then it started to go down. It started to go down into drawdown. So this is what I don't like. So what did I do? I closed 0.12, so almost 50% of my position as price came to 417. So as price came to 417, that was right over here, I closed 50%. So 50% was closed right over here, sorry, right over here, and then just right over here. And then, so this was a retest done, right? So this is a retesting level. So price closed above this, price went up, came back down, it's retesting this area. So what did I do? I kept the other 50% open, and then you see price started to go back up, 458, 519. So at 519, just over here, I secured another 50% in profits. So this covered the almost 98% loss from this. And I had a runner going. So runner went to 560, and that was right over here. So 560 was, so this candle closed. So the next candle, it went all the way up to here, and then it retested this, it tested this zone over here. It looked left and it saw, oh my god, all my candles are here, all my friends are here, so let me also reject this. So this candle touched this point and rejected all the way back down. So as it was coming down, I looked left and I saw, okay, so this zone is a very strong zone, and maybe we will not break this zone. So what did we do? I secured my remaining positions at almost at like break even, 0.03. So as you see, this was the 10 pip trade I had, and this I secured at 50% loss. This I let the 50% run, and this I secured almost at break even. So next, in the same session, I saw that I went to gold. So I went to gold and I saw that, let me go to gold now. So this was at this was at yeah, on the 27th. So on the 27th, so let's go to 27th. The 27th is right over here. 27th is right over here. So my entries are at 1905, right? 1905, yes, 1905.59. All right, so 1905.9. What happened here? 1905.9. So this candle, right? So this candle, I saw this. So what did I do? I drew my zones first. So this price action from here hasn't happened yet. So I was looking left. Looking left, you can see that during Asian, this was supported, and then this was during this was my entry over here. So price was in a bullish momentum. So price was in a bullish momentum. This was a zone, so this hadn't happened yet. So this was the area. So this range was almost 100 pip, no, almost 100 pip range. So I saw price forming support here, but I didn't take a trade. And over here, price formed a support. This was a mini support formed on, so I look left. So this came like this, mini support. So this right over here. So what did I do? So as this candle was forming, so I went to the 15-minute. Yep. So on the 15-minute, right? So on 27th, yeah. So 1905. So right over here, 1905. I took entries. So this was my entry at yeah, right over here. So 1905, long position, 1905. 1905, it stops below the breakout candle, because as you see price, you look left, you see this rejection, then you see this guy came up all the way here. So as this guy was breaking up, so I looked left and I saw this wick to be filled. So this wick was supposed to be filled, so I got in somewhere here, and then I secured at 1907.11. So 1907.11 was right at this point. This candle, so the volume was so intense that gold got pushed all the way. So from here to 19007, right over here. And then right over here I secured, and then I didn't have any positions running. I called it a day, and the price came back over here, and then we went all the way back here to 19010. So there was money left on the table, but that's fine. I got around 20, 10, no, I got around, yeah, almost around 10, 20, 11, 13, 14 pips. Yeah, 14, 15 pips. I got around that. And then I just called it a day, because as I came here, I just thought, okay, you know what? We had a good win. We've had somewhat a good winning streak. So see, all this was a winning streak, because my winners were bigger than my losers. So $30 loss, $4 loss. So okay, so I was like, okay, well, I don't want to risk. This was like on Tuesday, so I didn't want to risk anything more. And then this session was on the 28th. So 28 at 135.337. So 28. Let's go to GJ. Let's remove everything over here. And so this was on the 28th. 28 was right here. Yeah, so 28 right over here. So this was taken sorry. So this was taken during the London session. Yeah, this was taken during the London session, and I had entries at 135.337. So 135.337. So that was, let's put a 30. So 135.337. This was on the 28th. 135, right over here. So 135.337 was 135.337. Yeah, just over here. Let's put this up. Short positions. 135.337. All right. All right. So 135.337. So why did I take this trade? So this trade, so I look left. So once again, I drew my positions. This was taken during London. So I drew my positions right over here. And then I had zones right over here. And then I look left. I look all the way left. And then I saw that we had clean candles. See, let me zoom in here. See, right over here, we had a wick that had to be filled. These are wicks that had to be filled. And there was a support at this point. So what did I do? I put my horizontal lines just for visual representation. And I put one over here as well. And then I went back. Yeah. So see, this is what happened. So this got filled all the way back here. And then I went to the left and I saw that, okay, so price is heading further down. So what else can it do, So I went to the 4 hour. So I went to the 4 hour, reset chart. So then I looked left. I looked left. If price is breaking below this main 4 hour support, where can price go next? So at this point, I'm in the chart. Like I'm watching the charts and I'm thinking, okay, if now price is breaking down, so where can price go next? So then I see this wick on the 2nd of October. So I drew this line right over here. So right over there, I drew my line and I saw if it's respecting any other zones. So right over here, see, got respected here for market open. Over here, it was a fake out. So there was a high probability that price was coming to the next available support. The next available support right over here. So what did I do? I scrolled down to the 30-minute and then I took a trade right over here. 135,331, 135,331, and then we had and then I secured at 237. So this, my lot sizes was just one. I used the one lot and I secured at 237. So I put this and I put this trade and I went to eat. So 137, 137, 237. So my stops were just over here. It was around 20 to 25 pips stop, but I was managing it on the 15-minute as well. Let me go to the 15-minute. So 15-minute looked like this. 15-minute looked like this. So my stops was just here. So I wanted price to respect this, and if price was coming all the way back up here, I would have closed my entire position because I wasn't going to risk it. But since momentum was very high, see the momentum, right? Momentum is very high, volume was kicking in. So what did I do? I took an entry here, and I secured at 237. So the momentum was a lot. So this candle itself gave me my 10 pips. So when this candle, this trade was literally around 5-6 minutes. Yeah, 5-6 minutes. So when this candle closed, I got my 10 pips. So that's what happened here. 337, 237, secured over there. And yep, so 237 over here. And then we started the New York session. This was a 2 lot open, 150, 175. Yes, this was a 2 lot open on 135.045. So we are still over here, same targets. So this will look left. So this on the 30-minute, it looked like this. Yeah, so 29th. Yes, this was on the 20. No, this was on the 28th. 28, yeah, 28 is just over here. So this was the target. We were waiting for so long, and then we saw that gold was doing some magic, like gold was going up. So, but we were looking at GJ, so we were waiting. We were literally waiting for. We started at 4 p.m. my time, so this trade we took at 5:30, around 5:45 we took. So so what happened over here? So we were waiting till this candle closed somewhere over here, and we wanted on the 15-minute. On the 15-minute, it looked like this. 28. Yeah, so 15-minute it looked like this. This candle closed below all this, a perfect close right over here. The only problem was that it didn't have a wick to the bottom. So but we were going to manage it anyway. So we took an entry at 135.045. So 135 just over here, 135.045. So as this candle was here, we had a sell stop order. If you can remember, we had a nice sell stop order right over here, and we had a stop loss right above this, and we were hoping that momentum would push price down, but price formed like this. It came back here, and the next candle, if you can remember, the next candle came up over here, and then we analyzed this trade on the 5-minute. On the 5-minute, where is that chart? Let me go back to that. Hold on. So on the 5-minute, so this was the price action on the 5-minute. So 5-minute, the low was breaking. I hope you guys remember that. I was telling you guys this. Wait. All right, so yeah, so this was the price action on the 5 minute. So price closed like this, and then we saw 5 minute forming a weak bullish candle, and then we saw this candle breaking the low of the 5 minute candle. So when this was breaking the low of the 5 minute candle, then we had around 80% probability that price was at least going to hit 10-15 pips down. So what did we do? We secured at one. So over here I had this open 134. So 974, I secured majority of my positions, and I had 50% open. And then 929, as price kept coming down, I was securing little by little, and then I secured all this, and then this was my 11 pip trade. So 135.045, 935 I've secured right over here. 935 was right over here. So I secured 10, 11 pips over here, and then I call it a day. So this was my runner. So I kept a small runner. So you need to keep runners, because that will instill confidence. Like that will help you and your psychology to like keep trades running. Like you don't have to look at your MT4 terminal. You just put it at break even and then let it run. Like whether it's a loss, whether it's at break even, or whether it's a runner. So it's going to instill confidence in you. So yeah, so 135.045, so right over here. So price kept on coming up. So on the 5 minute I was monitoring it, and then finally I closed that as well at 135.003, like just over here. Yeah, somewhere over here, close to here. I didn't want it to come back and hit my break even, so I was monitoring that. And then we had so this was the buy stop, right? This was the buy stop. This is the buy stop I had at 135.332. So I was aiming. This was hold on. So this. So, all right. So now this was on the 29th. Oh no, 28th. So this is on the 28th. So this was during okay. So these two entries I took early entries. So this was right after the session over here. So I took a three lot open. Yeah, a three lot open. So at 135.311. So 135, 130. This was on the 28th. Yeah, so 28. Let's go back to the 28th. So 135, 388. 28, yeah, 135, 388. All right, this I took it over here. So 135, 388, right over here. And so this, what happened was, let me remove everything first. Okay, let's draw zones, fresh zones. So this was this thing. This was, so this price action still hasn't happened. So this was there, and this was right over here. So you look left and you see that it's supporting all these areas. And then so this was around 7 p.m. my time. So what happened? I took an entry right over here, 135, 135.338. So 135.33, sorry, long position. 135.338 was just over here, 338. Yeah, right over here. So my stops were, yeah, to be honest, I kept a stop of 20 pips just over here, because once again, I was looking for a swing trade. I was looking for a swing trade to at least go to 136, 137, because at that time the news, they were having Brexit talks. So because of that, I was hoping for some momentum to kick in and price to hit my targets, but unfortunately that didn't happen. But so 135, 311. Oh, wait, what's this? So this buy stop, I closed it. So this I had 135, sorry, 135, 311. That was right down here. Yeah, 311. Yeah, just over here. So I had a stop here, and then price was coming up. Then I realized I realized, okay, you know what, like I've been doing pretty good for the week. So let me just close this trade. I'll close this trade and I will keep one position running, just one position. So, because I had a 3 lot open at this point. So I was like, okay, I'm gonna close this trade. So I closed this, I managed risk, closed at a profit of 27.33. And then I had this running. I had this running for 649. So this was taken after I closed this, right? So I took this at 649. So 649 was, I remember this, it was right above this. So right over here. So this was a trade which I took with a stop of almost 30 pips. So 30 pips stop to make some money, like 100 pips at least. So 30 pips. So in my mind, I was like, okay, I'm gonna risk at least some money which I made over here. Like, you know, this one, 300. So $300 was like, okay, fine, let me risk $300 to make at least $600, $700. Then during Asian analysis, I saw, so this was what I sent out during Asian analysis. So Asian analysis looked like this. So I took a trade here, right? So I took a trade here, and then price, I went into a drawdown, and let me see, it's a long positions. I took it here. So I had a stop just below this, just below this candle, like below the support. So I was hoping that price would, like, you know, come up to all the way here and then continue further on. Then, so no, price kept on ranging. So this was actually a lesson for me as well, because see, this was outside my trading range. So I thought, okay, fine, you know, because overnight GJ used to run a lot. So I took an entry here. Price went into drawdowns, but it didn't hit my stop. So it was just in this range. Price came back up here. I did not secure, I did not close, because see, this was a major support. So I knew that price, because I made up my mind, I am going to risk $300 to make at least another $300 one-to-one, or like, you know, just make some cash, because I was up for the week and I wanted to risk this position, this $300 on this trade, because I knew that Brexit talks would get absorbed and price would continue further up. So what did I do? I took an entry here, price came back into drawdown, and then I sent out the Asian analysis. So Asian, if you guys remember that we had this nice range on the left to fill, and then I placed buy stops here and sell stops here, sell stops and buy stops. And then I realized at this was around 5:30 my time. So I realized that, you know what, like I'm not gonna aim for this. Like I'm just gonna secure when it goes in profit. So price was over here at that point, right? So when I made up my mind, it's all about psychology and how you think. So over here, I was comfortable with $300. So I was like, okay, no problem. But when price came up here, I knew that price was going to head up all the way back over here or come back down. So whatever, it's probability, it's a 50-50 probability. But the way the candles were forming, like, it was awesome. So I knew that volume was going to kick in for pre-Asian, and then we were gonna break up. So I had buy stops placed right over here, and a 10 pip profit. Where's that? Right over here. So 10 pip profit over here. So what I did, so 649, this was open on the 28th. So as you see, the date is on the 28th. So I got 10 pips right over here, 749. So 749. So price, this trade was held for almost 11 hours. Yeah, so 749. So this was around here, yeah, 10 hours. So 749, I got out over here, 749, just over here, and my buy stop also got activated. So this, as soon as this hit my take profit, so now we go back to the buy stop. So our buy stop was placed at 135,652. So 135,652 was right over here, just above this high. It was placed, and then this candle, this Asian open candle, this went up all the way up. So I was never in a drawdown. I secured at 752, if I'm not wrong. Yeah, 752. 752 just over here. And so the next candle, so I remember JJ straight, the next candle came down, created a weak bearish 30-minute candle. The next one broke the high and went. So this was once again money left on the table. This was around 25 pips, but I was asleep and I didn't want to risk it. I didn't want to risk it. So 10 pips, 10, 15 pips is more than enough. And I realized that taking a trade here wasn't worth it because see, price went down, came up, down, came up. So this trade was like, I would say this was just a test, you know, this was just a test, like testing the limits where price can go, testing your own limits, pushing yourself, like, you know, like increasing that mental barrier, like pushing that mental barrier to see if you can leverage or make money while you're asleep. So that's what I did here. But yeah, so profit is profit. End of the day, profit is profit. So I secured at this point, and yep. So over here, I was in profits, and then next we had yep. So this was the Asian. No, sorry, this was the New York session. So this New York session we had. This was the last trading session on Thursday. So this we had 135, 320. So 134. This on the 29th. The 29th we had right over. Yeah, so this trade was taken just before we started the stream, right? So 29th, right over here. So 29th, okay, just over here. 29th, so right over here. 29, 320. So 320 was taken here. 29, yeah, 29, 320, 320, yes, 320, 320. So you put this 29th, 320, 135, 320. Yep, right over here. Took this trade right over here with stops above this. And so price went into like insane 66 pips, if I can remember that correctly. Yeah, 66 pips, 67, 68 pips, 67 pips, yes. So this trade was taken based on this consolidation. So Asian came back right in this range from 30-minute bullish candle, but this was the London, yeah, this was London open, so came down, created a minor resistance to go back down. So you see that just because one candle is a 30-minute candle, like 30-minute bullish candle, doesn't mean you have to take buys, because the overall trend is bearish. We had 1, 2, 3, 4, 5 bearish candles. So taking a trade on the bullish candle, it doesn't make sense. It doesn't make sense at all. So then what did I do? I waited till this forms a mini resistance and then breaks the low of this. So when I came to the charts, it had already broken the low. So I went to the 15-minute. So then the 15-minute look just like this. 15-minute close like this. So as soon as this candle did its retest or whatever over here, as it was breaking the low of the 15-minute, I took the trade right over here with stops above the previous 15-minute candle. So that stop was around 18 to 19 pips, but I was going to manage it. So price just gushed down. So I was good for the week. And yeah, so I was in a profit of around $1,100. So then I thought, okay, you know what, I'm not going to risk it. So what did I do? I only risked 0.50 and I closed because I was comfortable. By Thursday I hit my targets and I was comfortable. I learned my lessons and I pushed mental barriers over here. So 52.24, sorry, so 48.05. So I secured here, and then we were just talking about all price action and on gold and how gold didn't break up, and we were analyzing gold. So this was a major move. So if I had held this move over here, I would have made around $360 in profit using 0.50 lot. So, but I didn't, but there's no ifs and buts. So therefore you have to be happy and content with whatever the market gives you. So over here, I secured around 11 pips, exactly 10 pips. So I was happy with it, and I didn't overtrade. I didn't take an impulse entry right over here. So what happened after that? So what happened after that is quite funny, because I took an entry at 135.029. This was right after the Zoom session call ended. So 135. So once again, I was trying something like this. This thing over here, which I tried, overnight buys to give me around 50, 60 pips. I tried that again over here. With a small lot, of course. So I took an entry at 135.029. So 135. So this price came here 135.029. So right over here. Yeah, 135.029. So this was my entry. So 135.029. So 135. Let's put this up. 135.029. All right. So as this 15-minute candle was breaking the high of the previous 15-minute candle, that's correct, right? Yeah, it's 29th, yeah. So as this 15-minute candle breaking the previous 15-minute candle, I took entries with stops just below this candle, the previous candle. So what happened? Price went into 135.029. So 135.029. So I put my stops, and I went away. The price went into actually a 12 pip profit, but I did not secure. Price came back down, and it hit my stops at it didn't actually hit my stops. I closed it manually. So 135.920, 135.920. So as it was coming close to my stop loss, I didn't want to risk my entire stop loss, so I closed it. Over here, just over here, just before my stops got hit. Closed it there, called it a day. Then the next trade, this one at again a retry. I retried, and I wanted to push that mental barrier, and I wanted to get that trade. So 135.022. So as price closed here, so then I realized that, okay, so this is the new support that was formed. Price made a high here, right over here. Price made a high there. So then I realized, all right, so let's take one more entry. So this was the risk was very well managed. So 135.022. So 135.022, that was exactly at the psychological level, and that was taken at 135. So just when this 215-minute candle indicated 30-minute candle. So 135.022 was taken here. It stops below the previous 15-minute candle, and then we saw that now my aim was to get price to go up to all the way here. So 135.128 was the point I secured. So 135.128 was right over here. So at that point, when price was in profits, this was a profit of around around 12 pips. My stops were at break even. And what happened? So this went into profits, and then when this over here, when I secured, hold on. This was at 135.128. So then at this point, my stops were at break even. And then what happened? Price went all the way back. I did not have a target or anything. Price went back up here, came back down, and then stopped me out here, because this was the market open for 30th. So 30th was right over here. So spread stopped me out, and yep. So that was the close of 135.002. And so overall, we had a very good profitable week. So see how the losses were kept small right over here, $30, $40, $52. This was just a test. And yeah, so the remaining position. So what is the goal here? The goal here is you need to secure all the time. When price is going into a 10, 15 pips profit, you secure, put price into break even, and then you let it run. So over here, like I said, like I had that 0.50, 0.40, 0.50 out running. Wanted price to break all those barriers, but then that was a test. So every time you test, but with controlled risk. You control your risk, you test out ideas, and if it works out, it works out. If it doesn't, then you learn from it. You learn from it, you write it down, you have a journal, you write it down, you track it, and whatever lessons you learn from the market, don't get demotivated, don't get disappointed. Just write it down and don't do the same mistake. So that's what I did here. Over here, so this trade, yep, this trade, right, 135,649. So this trade was very, 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 like, how do I say, it was controlled by 30 pip stops, and yeah, 30 pip stops, and yes, this one, 30 pip stops, and like, so see, the risk reward ratio was negative, but like, who cares? End of the day, it all what matters is if you make a profit or if you control your losses. That's all. So a lot of people I know, like, they want to get that one-to-one risk reward. So even if price goes into, like, they have a 10 pip stop and price goes into an 8 pip profit, they do not secure, they do not put their stops at break even, they do not secure, and then price comes all the way back down. So like, let's say for example, some guy took a trade right over here. Okay, so yeah, so right over here, right? So let's say he took a trade right over here. So long positions and stops are just below this, and take profit is over here. So this is not a one-to-one, it's almost a little bit below one-to-one. So let's say this guy was hoping, okay, I want price, like I want a one-to-one, so I'm not going to secure here. I want to secure when once price comes all the way up here. So what happens? Price looks at him and says, oh, you didn't take what the market, what I gave you. So let me take more from you. Let me take more from you. Price comes back all the way here, destroys him, and then goes back up again. So it always makes sense to secure profits. Secure profits when you are in profits. Yeah, obviously. So secure profits, even if it's like a 2, 3 pip, 5 pip, and if you don't feel comfortable, you secure profits, and the remaining positions, put it at break even. So at that point when you put stops at break even, you would know that, okay, like now it's risk free, I don't have to worry about it, I don't have to look at my phone, I don't have to look at my terminal. So you just have to control. End of the day, why it all comes down to why you are trading. Why are you trading? Is it for freedom, or is it your side hustle, or is it your main hustle? So it all comes down to that, right? So making money is important, but also protecting your psychology is more important, protecting your mental health. So there is no point of getting into trading if your mental health is going to go into negative, like by looking at charts, looking at the phone. You don't spend time with family, you don't spend time with your friends, you're just at the charts, you're at home, so that's what, like 4 to 6 or even 3 to 6 for my time actually. So that's Asian Colombo time. So 3 to 6, 2:30 from London to New York, and then I'm done for the day, and I test out new ideas, controlling risk. So that's about it. And the remaining time I go spend time with my family, spend time with my friends, and yep, and come back the next day. So even if you have made a loss, like in your mind, you should take at least like one trade or two trades. That's it. Because when you over risk, it will be like you are going to the war with the markets. You're over leveraging, you wouldn't even notice. Like, let's say, like back in the day, like 3, 4 years, 5 years ago, like when I used to trade, I used to think, okay, like, I make a loss and I want to make it back. So I open sells, I open buys, and price just destroys me. Like by the end of the day, when I look at my terminal, I'll be in a negative profit, like negative profit, which I can't even get back. Like sometimes even $2,000 on negative $3,000. So like I can't like fathom that now, because I don't even want to make a loss, right? Like 300 or more than 300 or more than $400. Like my risk percentage, my risk exposure is like $400 or $500 a day. That's it. If I hit that $500 a day risk exposure, I close my laptop, I go out, I take a breather, I come back the next day. I don't think about it, because I know this is a long run game. It's a game in the long term. So if you, like, for example, you have 2 shots every day. So if you fail one shot, it's up to you whether to play the next shot. And if you fail that shot too, so your quota is done. You come back the next day, you take your shot, and even if that fails, it's okay. You manage your risk, you make sure that
obviously everybody in life will have bad losing days, bad risk management. So when you hit that bad edge, like bad corner, you have to make sure that you are controlling it, that you are in control. If you are not in control, the market will control you, and eventually by the time you go to bed, you go and look at your terminal, would have destroyed at least 60% of your capital. So to get that 60% of your capital, you would risk 40%, you're going to lose that as well. Definitely there's a 99.9% probability that you will lose the next trade after you go into a loss. So you need to control yourself. So sometimes the market will tell you, it will be so this thing, what it will invite you to take a trade. It will be like, okay, you can take a trade now, I'm going to go into profit. So at that point you shouldn't, because you had your shot, you didn't take a trade. So you protect your psychology and you just watch the market. Don't, like, even if you're trading, like, let's say on demo, or you want to take a trade on demo just to see, don't take it, because that will affect your psychology. End of the day, like, when you're taking a trade on a live account or on a demo account, like, you're still taking a trade, you're still forming your mindset to take a trade after the trading session. So you shouldn't let that happen to you. You shouldn't let that happen. You should control. So after you're done, even after you take a loss, just close the charts, watch a movie, go out, go for a jog, run, think about it, write it down in your journal, come back 3 hours later, see what price has done, and see the clues that price gave you, what you could have done right, what you could have avoided. So that is very important when it comes to trading. And always secure, because the market is not going to go anywhere, right? The market is always going to be here. The market's not going to run away. You're not going to get pushed out of the market. Your account's not going to get deactivated. So you just have to make sure that you secure, because you can always come back and take a profit. Like, let's say you take, I aim for 10-15 pips, like, 10-15 pips every single time. 10, if you look at my trades, 10-15 pips. So over here I got around 15-16 pips right over here. So then over here, like, all these trades, right, all these trades, if you look, I've secured. Like, I don't look for like 10, 20, 30 pips. I secured even here 10 pips. Even if I'm going to sleep, 10 pips. So like 10 pips right over here, and then over here, a prime example would be right over here, because over here I secured not even 10 pips at 887. So 887 I secured. Why? Because I wasn't comfortable. I wasn't looking at a positive risk to reward. I was in profit. Like, nobody's going to come and pay your bills saying, oh, wow, you were in a positive risk to reward ratio, therefore I will pay your bills. No, you are going to pay your bills. So you have to secure profit, you have to secure the bag, and you have to make sure that you're controlling risk every single time. So if you have opened a position, and if that position is not what you expect, let's say, like, I opened a 5 lot here, and 5 lot here, like 10 pips there, and $500 gone there. Just saying, if I were in a loss. So what did I do when price went into more than 50% profit? I took trades. I closed the 4 lot, I kept a 1 lot. See, this 1 lot came and hit my break even. So imagine, like, I was looking for a 1 to 1, 1 to 2, 1 to 3. So I wouldn't have got this. So this was my head start for the week. And based on that, so altogether I had a good profitable week. So it comes to, end of the day, it all comes to how you secure. It's like driving a car. When you're taking a very slippery, bendy road in a misty mountain or something, do you go fast, or do you control your speed, turn the wheel slowly and control the entire car? Or do you go like you're racing in a Formula One track? No, right? So you have to manage your variables. End of the day, it all comes to managing variables and managing risk. So right over here, I managed my risk perfectly. This was like really good. This was good. I'm proud of myself, because I closed 50% here. I closed here. I didn't let anything this thing. So right over here, closed here, 52. So yeah. So if this was a 5 lot, this if this was a 5 lot, I would have closed the second it goes into drawdown, like $10, $15 or even $100 in loss. I would have closed it. Just because this was at 0.50. I kept it open, so that because I had enough play money to test this out, and then resulted in a loss and took another one, closed the trade, and that's it. that's it. And yep, so that is for the entire recap. So the entire recap along with some psychological cues, how to control yourself, control risk. And then the next week, so November 3rd. So November 3rd is November 3rd. Let's see, November 3rd is, yeah, right over here. So November 3rd, we have elections coming up. So election week, I'm pretty sure your brokers would have sent you an email saying that there'll be volatility in the market. There will be changes without margin changes without further notice. So this is the time. This is the time where you have to reduce your risk entirely. Like if I'm using a 5 lot, I'll definitely use a 0.25 lot or 0.50, nothing above 0.50, because like, see, these times are very uncertain times. You are going into the election period, then there is like Brexit happening, and then there is what, coronavirus happening. So a lot of places going to lockdown, and then you see in France a lot of uncertainty in France, then Europe markets. It's all a mess. It's all a mess. So this week, more than technicals controlling the market, it will be fundamentals controlling the market. So let's go to the Forex Factory, and let's just look at news, and let's just see like what is coming up, you know. So see, look at this. Dow closes more than 150 points low as Wall Street. Yeah. So all this are uncertainties in the market. See, election week, election time. So everybody is just going to talk about the elections. What is the job of a broker? The job of a broker is going to be causing volatility plus increasing your spread so that you don't have any buffer left. So your trades, even if it's 10 pips, when it comes to 3 pips, you're gonna get hit. See all this, right? So just look at this, stocks fell, major shares, everything is falling. So everybody is preparing for the election. So what do we as retail traders do? We sit on the sidelines, we take small positions, highly calculated risk, high probability trades. We sit on the sidelines, and then we watch what happens. We let the dust settle. That's our job. We let the dust settle. We anticipate, and we look at news closely. See, everything is going to change. The way markets are, the way gold is, everything is going to change from November 3rd. For example, if Biden wins, we'll definitely see the stock market fall because Trump is leading. Let's not talk about politics, but Trump is leading the stock market. A lot of investors have confidence in President Trump, so because of that, like the US 30, right? US 30. So it performed very well, more than it has performed out of all those years. So it performed this year the best. So now that election week is coming, we can see that everything is changing. We can see that US 30. So let's just check US 30 right over here and see US 30, Dow Jones. Yep. So US 30, if you look at the 30-minute, yeah, US 30 is in a downtrend from 28,000 to all the way by 26,000. So it hit its low at 26,000. So this was around, yeah, it's around 200 points. So I don't know, 200 points. Yeah, 200 points. And yep. So this next week, we will be having a lot of volatility. So probably my plan next week will be to look at the election results, and based on the elections, like time and when the results are coming out, we'll probably have a stream for that. We'll have a Zoom session for that whenever the results have been finalized, and we can just note down price action, because this election happens every 4-5 years, right? 4-5 years. So the next election that is going to happen
Wait, let me check. When is the next election? So the next US election, yeah, so yeah, it's 2020. So obviously it's November 3rd, but yeah, so let's just leave that at there. So let's say 2024. So 2024, like we don't know what's going to happen, right? We don't know what's going to happen even tomorrow. So 2024 is a long, 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 long way. Some of you would have even opened your own brokerage, or some of you would have even opened your own companies, or like finance companies. And so these times, this week is going down in history. So this week, because in 4 years' time, you look back at this election week, how did price react? What did price do? What did gold do? So you take a notebook, you write it down. What if Trump wins? What happens? If the opposition wins? What happens? And then we can take that data into the next elections. That is maybe in 4 to 5 years time, God knows. And yep, so that is my plan for elections. I would be reducing risk entirely. Why? Because there are two reasons. One is elections, and one it's the beginning of the month. The beginning of the month, I usually reduce my risk by at least 50 to 60%, and then middle of the month, I come back to my normal lot sizes. But also from November 23rd, from November 23rd, November 24th, we will experience low volumes because school holidays, bank closures, Christmas season, holidays coming up. So because of that, the volume will be quite low, but we'll be continuing this market analysis and live Zoom sessions for, I think, until Christmas. If you guys are available, and after Christmas, we'll be resuming our services back on Jan. But until then, we still have a lot of time. So next week is going to be very, very interesting. So next week is really going to be interesting, and yep. So what we can do is, so I've ordered this simulations package, which I'm yet to receive. So once I receive that, we can start on the simulations from next week. And based on that, so based on that, we can take entries, and I will ask each one of you to take entries. I'll give you remote control access to my screen, and you guys can take entries. And based on that, I need each person to explain why you are taking that entry, based on what confirmation. So that way, um, when you are really executing in the market on a live account, then you will recall all these sessions that we had, all these risk management, all this risk management tools and everything. You will remember them, and you will use them in your analysis and when you're managing your trade. So that will be the key. So next week, hopefully I get that package sorted out. And for now, today we had our entire breakdown from last week's trade. So if, so since JJ joined recently and Ashwak also joined like Tuesday, Monday, and so Daniel obviously would have followed all this, and Jonas too. And yep, so we shall see what next week brings us. And next week, please remember to reduce your risk, because risk is important. You don't want to go into the end of the year or beginning of the month with a massive loss, because that is going to spoil your entire last quarter of the year. So go with minimum risk, and if you don't want to trade, that's fine. You can paper trade. You can take 1 to 2 trades a day, paper trade it, and then just write it down. Have a journal, write it down. So writing it down, so it's, a lot of people tell you to write it on your laptop or like type it down. But I would say that writing it down, when you write your mistakes down with a pen, you would realize that it sticks more to your brain. The next time you're going to make that, you will definitely have a picture memory of what you're writing down, and of what you wrote down, and you wouldn't take it. So if you type it, so it's all about a lot of noise in your head when you're typing it. Okay, I made this, I made that, I made this. It's just typing, it wouldn't stick to your head. But when you're writing it down, it sticks to your head. And
what you can do is after you write it down, take a picture of it and upload it to wherever you're uploading, whatever database you have, upload it there. Then over there, you would definitely have your chart stored. Obviously, you can't draw your charts on your notebook, yeah? So you have to store your charts elsewhere. And after you write it down, take a picture and then take a picture of that written note down and then upload it to wherever you are storing. So that has been my key. Like I've been writing it down, uploading it. And so if you check my IG, I have all my trades. They are the same thing which I have written it down in my notebook. I have written it down on IG as well. So all these trades that I've taken, I have uploaded them on YouTube. So I know IG, like you have to go through all my profile and all my pictures, but I think YouTube will be a better option. So on YouTube, I will share you my link, and yeah, I'll share my link, and then I will. It has a playlist, so all New York session trades are placed under that. So you can go there and you can, at your own pace, at your own comfort, go through it every day and see what I did, see what we did as a team. And yep, so that's about it for today. And if you have any questions, please do ask now. You can come on chat or voice, anything is fine. And yep, just go ahead. Anything is okay. Just ask about anything regarding forex trading, psychology, elections, no problem. Anyone has any questions? JJ, Daniel, what about you? Guys? All right, so I think that nobody has any questions, but yeah. So all right, thanks, JJ. And so next week we will see how election goes, and I will be sending out some reading materials tonight. Those are some very good reading materials which I've gone through. Actually, it's a book, but I will send you the chapters only. So just read those chapters about risk, about psychology, and it will definitely prepare you for the upcoming trades and everything related to forex. So let's see how next week goes and how everything turns out to be. So, yep, that's about it. If anyone has any questions, please go ahead, and we can end the session if you guys have any no questions. So that's about it. So JJ, how was your week? All good? Okay, so yep. At this point, okay, that's perfect, JJ. That's perfect. 2% is really good. That's really good. See, 2%, 2%. Even the banks don't give you 2%. So that's really good. So 2% for this week is pretty good. Keep that up. So next week, let's reduce the risk and let's trade. Let's trade and let's see who wins the elections. All right, guys, then let's call it a session and let's see you guys on next week, Monday at 6:30 a.m. Eastern and 4 p.m. my time. All right, JJ, Daniel, Jonas, all you guys take good care of yourself. See you guys on Monday and have a good weekend, have a good Saturday, and have a good Sunday. Take care. Oh, and also I will be posting this video on YouTube under unlisted file. So you guys can go back to this whenever you want to listen to this. All right, guys, take good care of yourself. See you next week.